Hello, everyone, and welcome to another edition of Let's Talk ETC. I have a special guest with me, Natu Myers. He's a blockchain entrepreneur. He's written several blockchain technology-related articles, some of which I came across. And so I invited him on the show to talk about scaling because he's written articles regarding that and has a lot of good info about that. So welcome, Natu.
Thanks, Christian. Nice to be here.
So before we get into our scaling discussion, why don't you kind of share a little bit about yourself and kind of what you're working on and how you got involved in this wacky industry?
No, for sure. So I guess how it started was just like many other people in 2017. I was at my programming job, just started hearing about ICOs, initial coin offerings, and started investing and just digging into the Telegram community and flipping coins here and there. And it's just, as you probably know by now, it's just a rabbit hole, right? And kept on going that route, decided to just do it full time. So left my job and then started to just learn how to invest in things like that full time. And eventually a company called Unified reached out to me, said that they wanted somebody to write reports for their investors. And, at the time I was, writing some articles and learning my left and my right in the industry in terms of projects to invest in. I started writing reports for them. They had some retail investors all around the world, notably Korea, and I just wrote in different pieces. And then as I wrote in different articles, I started to learn about different projects. And from there, I just started to reach out to different investment groups. One of them was DE Asset Management. They're a group out in Vancouver. So just helping them improve their deal flow and get more clients to service. And another one is an OTC desk in Toronto. So I'm just helping them with deal flow as well. And yeah, it's just connecting people to blockchain financial services. That's at the crux of what I do.
Okay, so when you OTC, is that like an exchange?
No, so OTC just stands for over-the-counter trade,
right? And
I'm pretty sure the name came from the traditional markets. But is this any large volume, so large amounts of a cryptocurrency trade? Okay. And they solve the problem of slippage. So when you make a big exchange on a normal cryptocurrency exchange, the price would change with large exchanges of cryptocurrency. Right. So that's what OTC desks try to solve.
I see. Now, I'm curious, can you share some ideas of how they deal with the security? Because I would be just terrified of making a mistake and losing a bunch of people's funds.
You mean the security in terms of how the deal is made, or in terms of the tech?
Well, like running an exchange and you've got millions of dollars worth of cryptocurrency flying in and out, just the tiniest mistake could be catastrophic. So what are some Herculean steps that they take to protect themselves from, getting in trouble?
Yeah, well, I mean, in terms of the OTC world, that's a really opaque world still, even though I'm working in terms of the technical side, because I'm more on the client acquisition side.
Okay.
But in terms of exchanges, I know for one, like Quadriga here in Canada, where I'm in Ottawa right now. Quadriga, it's really simple when people use exchanges, because it's just a matter of making sure you have control over your private wallet of your cryptocurrency address, right? Uh-huh. But the issue is that a lot of the exchanges that have a lot of liquidity, so have a lot of access to cryptocurrencies to trade, they don't have a lot of, they don't allow you to have access to your private wallet. So then if something goes wrong or there's a hack, then that's gone. I remember Binance in their white paper they were talking about they were trying to follow two certifications in security, and one of them was specific in the cryptocurrency industry, but they haven't issued proof of them actually having these certifications. It was more of just kind of, we're trying our best. So it's a risk, because as long as you don't have access to your private key, you don't have access to those wallets. So
right. So are you saying the exchanges so they prefer the users not have the private key? Is that did I understand you correctly?
Well, I'm not sure if it's a preference. Is this they? Well, I guess it is because they have control. They have complete control over. It's kind of like you're leasing access to the wallets,
Right.
and the withdrawal. That's why there's a withdrawal fee, because the whole idea is to kind of keep the money in the exchange.
Right. Right.
And legally, I'm not sure how the legal ramifications work, but as long there's a quote that's like, as long as you don't have access to the private key, it's not really your wallet.
Right, right. So yeah, I mean, I just would think I would be, just stressed out if I was trying to run the exchange. But anyway, all right. All right. So then so everybody is concerned about scaling. Blockchains have all these wonderful properties, right? Trustlessness, the being decentralized, but of course that comes at a cost. And so it's not so trivial to say, okay, let's replace the entire World Wide Web with a blockchain platform. It's not so easy to replace the web and still have all these new wonderful properties. And so there's trade-offs that you have to make. And one of the articles that you wrote describes something called the Blockchain Trilemma. Can you elaborate on that?
Yeah, no, absolutely. So I'm not sure how it came about, but I'm pretty sure this concept kind of existed before I saw a company called Big Chain DB writing an article on it. And what they were talking about was, when you have a blockchain, like, there are three really important properties. There's speed, or in other words, scale, just how, like, whenever you add a transaction to a blockchain, how fast those transactions can be actually added to the blockchain. So there's security or consistency, so whether the data is secure or not. And then, so we have speed, we have security, and then we have decentralization, meaning how, like, so the whole purpose of blockchains is to make it so that one group of people do not control all of the information on the blockchain, right?
Right.
So the thing is that people have found that you can do two of the three things really well, or a lot of projects do two of the three things really well, but they always struggle on the third. And one example, the classic example, Bitcoin and Ethereum, they may have a lot of decentralization. In other words, a lot of nodes or computers that validate the transactions that get written on the blockchain. They may have a lot of those, so that's really decentralized, right? And then they may also have a lot of security. So the nodes probably the consensus, so the way that the computers agree on how the transactions are added to the blockchain, maybe they have a really robust way of doing it, i.e. proof of work. Right. Proof of work is to those who aren't familiar, it's really, some say it's slow and it's energy inefficient, but it's secure.
Right.
So with those two, getting speed is really hard because the whole network has to agree on the transactions that are valid, and then that's the battle that Ethereum and a lot of other projects always try to, well, not always, but a lot of the time try to solve in their white papers. Right,
and that's also, of course, Ethereum Classic has a similar architecture to Ethereum, and so of course it has the same issues. It chooses to do great on the security part and the decentralization part, and it's the scaling that is a work in progress. Yeah, so definitely. But then, and other blockchain initiatives make different decisions, right? So some people, you can get more scaling, but then you have to trade certain properties. So, and you had a list of different decisions that different platforms make. Do you want to kind of go through some of those to give people a sense of the different choices that are possible?
Absolutely. And the funny thing is that I haven't, since I wrote that article, I've probably come across like a lot of new protocols that I didn't come in touch with since then. And one of the craziest ones, in my opinion, well, crazy by crazy, I mean a positive crazy, not a negative one, is Holochain, because Holochain is a really interesting project because the way that they're trying to solve the problem of speed is to move from something called a data-centric framework to an agent-centric framework. So all that means is that, for the blockchain, all the transactions, they follow one universal truth of how the blockchain is organized, right? Yeah. So, so if I transact with you, Christian, then that transaction will be shown on that blockchain for everybody who sees that blockchain.
Right.
But Holochain wants to make it more like GitHub. GitHub is a code sharing website, and GitHub, and so the data on a blockchain. So everyone has their own private blockchain, and then there's like this universal something called a distributed hash table, where the data is essentially, the data depends on the viewer of it. So that's why they call it Holochain. It's like a hologram, a 3D hologram, where the perspective of the data structure changes based on the observer. So by trying to make it so that not everybody has to have a consensus on how the transactions are configured, then they try to solve the problem of scalability. So that's one twist. And a lot of projects are doing so that's one type of project.
So I assume I'm not that familiar with that platform you just shared, but I assume that not every transaction has to be made public, right? Some of them can just be private between individuals, and so that helps with scaling as well.
Oh, absolutely. Yeah, that's how so the source chains, the private chains that people have on Holochain, that's what they try to do. And what you just mentioned sounds a lot like state channels.
Right.
And state channels, if anyone following Ethereum, you would hear about state channels, and it's just a technology where part of the load on the Ethereum network is taken off Ethereum's blockchain and puts on another layer, and these transactions are settled and brought back. So that's just like a high level explanation, but one common pattern that people are seeing amongst new blockchain initiatives is to make state channels or side chains where you take off the load off the main blockchain, or in other words, parent chain or source chain, and you bring some of the load down to a side chain or a sub chain or a child chain, or use a state channel for people to issue transactions separately. So that's a common pattern that people are seeing.
Yeah, and I can't predict the future, and who am I? But it seems like the idea of outsourcing, offloading some of the work of the main blockchain, I think that seems to have a lot of promise. And so I presume that is just going to be advanced and developed more and more. Why not have several layers, several options, and they don't all have to use like the industrial strength security of like the Ethereum Classic main chain. So that seems to make a lot of sense to me, at least.
Yeah, but I think the issue kind of goes even deeper, because there's a whole governance issue too. That there's a governance war that's being fought amongst different projects too. Because one really great venture capital firm, America, Outlier Ventures, they mention the trend of how projects with good governance. So the decision-making rules by, like, basically how a project is governed, how blockchains are governed. So seeing projects that focus on good governance is really important in terms of taking some of the load off the blockchain. Because if you think about it, all proof of work is really just a way of governing a blockchain. You've come into an agreement in how the blockchains are configured.
Right.
But you have projects like VeChain and things like that, where it's important where you hold the tokens to have a vote on what types of transactions are valid. So that's another emerging trend, and people are going to see, to kind of make it so that you don't have to get everybody to validate transactions, which can make the speed hopefully go up.
If I'm not mistaken, that's called proof by authority. When you have votes, if people are writing down the buzzwords, not that it's that important, but no, yes, you brought up a good point. Once you go off the main chain, then you may or may not be using proof of work anymore. And so whatever you use, it's important to use something that is reliable, trustworthy, that people have a lot of confidence in. Otherwise, it's going to end badly. Right.
Yeah, and like proof of stake. I've seen a common. So just to elaborate for those who aren't familiar, proof of work is just, long story short, using your computer to prove that you've done work to validate transactions. So it's like your computer solves a hard mathematical problem to prove that you've done work to validate a transaction.
Are you referring to proof of stake or proof of work?
proof of work, just trying to break it down here.
Right.
And proof of stake is just, long story short, proving that you stake tokens or you hold a lot of tokens so you can have a vote on what transactions are valid. Right. And so one model I'm seeing is, and one thing I'm seeing is that, some people say proof of stake has something called the nothing at stake problem. And this problem, actually, I believe it's been solved by I'm not sure if it's Ethereum Classic or Ethereum or which one, but I believe this problem has been solved. But, a lot of white papers try to have a hybrid proof of work and proof of stake model,
right,
to kind of go around the problem of nothing at stake and other problems of proof of work. And, so try to make it so that you don't have to be that intensive on the validation side of things.
Right.
So everyone wants security, but people just wants to stay away from the need of this intense slowdown, right?
Right.
So,
yeah, exactly.
You want to eat, you can have it. Yeah.
So the blockchain trilemma, the properties we all love: security, scalability, and decentralization. So Ethereum chooses two, and if anything, it sacrifices scaling. What are some other choices? Like what would be an example of a project that chose scaling and security, but not decentralization?
Well, not to be controversial, but some will argue that, EOS is really fast. They have, they have robust security there, etc. But I don't remember the exact number of nodes. It used to be pretty low, but the amount of nodes was a cause of concern to many people. And one thing people look at is if there are not that many nodes, and if there's a lot of focus on you having to vote for nodes or you having to delegate those nodes to validate the transaction. So basically, if they're not many nodes that actually validate these transactions, people get kind of concerned and say, oh, is this really centralized, decentralized? Right. So yeah, I'd say EOS maybe really, I'd say it's really fast. It's probably good for building a lot of dApps because of its scale. And, it's been a while since I researched it, but I would take it as pretty secure. Some argue that maybe it struggles on the decentralization and the governance side. And there's some projects that, a lot of projects that have people kind of stereotype and say projects with delegated proof of stake. Mm-hmm. The nodes that do the validations are really usually small or fewer, right, because more people are just holding tokens to vote for which nodes they want to do the validation, but the nodes actually doing the validations maybe like 10, 7, etc.
Right. And yeah, so then decentralization is just not there. Where would IOTA fall on the trilemma?
IOTA, if I remember, that was the project that's really fast, really IoT focused. They have that was one of the DAG, right? The direct acyclic gap. Yeah. So that one was just trying to jog up my memory. So that one was fast, and because of its, I think they reported a high transaction speed.
Yeah. So I think that they are centralized. I don't think that they're very decentralized. So I think that's, so they suffer the same consequences as EOS.
Yeah, and how is that in there's so many projects. So how is their governance and their node structure?
Yeah, that's a good. Yeah, I don't know. Governance is an important issue. I don't know how they solve that, but so they have different trade-offs too. Now, I'm afraid to ask, but are there some blockchains that choose to have scalability and decentralization, but they give up security?
Interesting. Well, kind of. If you look at Tangle networks, like Tangle network, when I was looking at a white paper with a project with a Tangle, so not a blockchain, but a Tangle, sometimes there's like a margin of error that's accepted.
Okay.
And I don't remember the exact because these were really technical white papers, but like there was a margin of error that was accepted. Uh-huh. And because of this margin of error, it allowed them to be faster, and they maintain their decentralization.
Interesting.
Yeah.
So it's called Tangle networks?
Yeah, the Tangle.
Okay, so it's called Tangle. Okay,
Yeah, it's not a blockchain. It's a tangle. That's what they call it. Yeah.
it's a tangle. So if somebody is so concerned about decentralization, they're just a hardcore libertarian, and of course they want scalability. They want commerce to happen quickly. If they're willing to risk losing some funds once in a while, then Tangle might be for them. Is that correct?
I mean, perhaps, and it really all depends because I believe it was IOTA that had a tangle. So, some of these things depend on the situation, I'd say. But for IoT transactions, maybe that's okay, right? For IoT, IoT is really different and it's really micro. You're dealing with microtransactions rather than people trying to move big money, right?
Right. So there's a use case, right? If somebody has lots of micro transactions, then one of them getting lost is not the end of the world, and so they might prefer to risk that but have greater speed.
Yeah, well, I mean, yeah, if you have like a margin of correctness that you're upset for your project, then I'd say so.
Right. I mean, even the internet works that way, right? Packets can get lost, dropped, and then they're just retransmitted. And so there's protocols that can accept certain amount of issues. Yeah, definitely. All right. So, any other interesting initiatives that made interesting choices regarding the blockchain trilemma you want to mention?
So we have security. We have. Well, I mean, one I'd say is, let's see here. So Nano is really interesting with how they do it because Nano has something called, they don't have a blockchain. They have something called a block lattice. And the block lattice, this was a while ago when I researched this project. But they're known for their speed. And this was a while ago. I can't really remember off the top of my head, but one thing is that there are a lot of alternative structures to blockchains, and some of them may not even adhere to these three properties right here that we're talking about. There's some controversy regarding the trilemma as a whole because some projects and some people, such as I'd say even like Komodo, they would say that the trilemma may not exist or it may have been solved already, but people are just overemphasizing the big problem because of Ethereum's contribution because Ethereum's large presence, right?
Okay. So wait. Okay, so if it's been solved, then that means they should be able to tell us a blockchain that has all three properties simultaneously. So what would that perfect blockchain project be?
Well, I mean, people are saying this all the time with and the issue is that you have to separate the marketing from the facts. Okay. And I'd say that Quark Chain's white paper, they really try to sell the fact that they try to solve the trilemma.
So Quark Chain is claiming that they found the Holy Grail.
Well, I mean, that's what their white paper is saying, yeah.
Okay, but they haven't they haven't fielded the blockchain, and they're not taking transactions yet. It's just a work in progress.
And I'm not sure where they are in a roadmap, but a lot of these projects are very early on, and a lot of the transactions per second that we're seeing, they're under very specific conditions. So when a project says they've reached a certain amount of transactions per second, i.e., like Zilliqa, etc., Matrix, all these projects, it's under certain conditions because some projects would say that this is the theoretical max transactions per second. So I think it's really important to kind of differentiate projects that say we've reached this amount of this transaction per second speed in a live network, or just we've reached it with like our special consortium of nodes, because the centralization and changes like depending on how early a project is. Like I know WanChain, for example, was saying that they had permissioned nodes. So in other words, computers that they personally chose to validate transactions to oversee the network in its early stages, which may show that transactions are maybe faster. But as it goes into a live network, it's hard to tell if the theory and the facts match, right?
Right.
So that's one.
Right. So buyer beware. The Zilliqa, I had some of those guys on the previous show, and they have sharding, and they, like you said, they claim really fast transaction rate, but I believe they trade on they give up decentralization to some degree, and so you can see that it's difficult to have scaling, security, and decentralization. And people claim that they have all three, but it doesn't exist in the wild yet. They claim that it's up, coming soon. So we just all have to take a wait and see attitude. Is that correct?
Yeah, and I think one of the biggest concerns is probably really understanding if governance is really making a project decentralized or not, because a lot of projects that use delegate proof of stake, and people are allowed to vote for which nodes they want. The nodes actually make the validations. You have to have a lot of you have to have a lot of money to run your nodes. You have to have a lot of hardware. You have to have a lot of and there are only probably 50 of you validating transactions, but there may be like 10,000 or 1,000 voting.
Right.
And it's people have to determine how much the voters are actually really part of the project or not. And it's not really decentralized. If so, then maybe we're closer to solving it. If not, then something needs to be fixed.
Right. And so speaking then of the future, do you have any thoughts on kind of any predictions on what you think we are going to see in the future regarding scaling advancements?
Well, with the recent Ethereum update, I'd say, people are saying that Ethereum is on a road to proof of stake. Right. And like as great as that may sound, there are, I've talked to several mining groups that own a lot of hardware, and then a lot of them say that more realistically, maybe a combination of proof of stake and proof of work, because what would that really mean for the miners, and how long would that take to happen? I'd say, not to toot any project's horns, but I'd say there are two trends that are happening. I'd say one of them is kind of, Aeternity is a good example, because they're a project that's Aeternity and Decred with their proof of work and proof of stake hybrid. They don't want to just put all their eggs in one basket with proof of work or proof of stake. They want to get the best of both, because both are proven in certain ways, right?
Right. So then, so maybe people they'll test other consensus mechanisms by combining them with proof of work, so that they don't quite have to give up the security of proof of work all at once.
Yeah, Komodo leverages Bitcoin's network, and I mean maybe depending on how concerned you are about the environment with this, like it may not, leveraging proof of work to varying degrees may help, because we have different things that are trying to improve proof of work. We have the Cuckoo cycle, which was a paper written. We have Bitcoin NG. So there are a lot of different, kind of add-ons and improvements to proof of work that are happening. And if you combine that with some sort of voting system, then sure. But I think Decred does this really well when you look at projects that carefully manage proposals, forks. So forks is just how projects kind of evolve over time. Mm-hmm. And so those two things specifically, because a lot of projects that offer delegate proof of stake, so just voting on which nodes can validate transactions and such, they say that in the future you'll be able to vote on the project, but at present you're just voting on the nodes that validate transactions. So I'd say a more active version of voting, where you can control forks, you can control more. I think that's probably where we're headed.
So a lot of these, you're saying a lot of these platforms start more centralized, but then they'll probably become more decentralized.
That's what I would say, and I'd say that both in terms of the development roadmaps and in terms of as we're seeing them, because like look at Bancor's hack. So Bancor, great project, but they had a hack, and what happened was they actually reversed some of the transactions that happened. So Bancor is just a project that tries to solve the problem of liquidity with smart contracts that automatically make markets.
Mhm.
And when the transactions were reversed, people were scared. They're like, is this really a decentralized exchange? How are you reversing transactions?
Right, exactly.
But they said that, well, at the beginning, we have to provision the network. We have to provision it for, this is what we do when you build out projects. And that's a pattern that people have to see and kind of accept as these projects get built out over the years, where all of the risk is taken away from the founders and put onto the network. So I think people have to be considerate of that.
Right. Okay. Now, what are your thoughts on Lightning Network? Do you like the Lightning Network idea?
Yeah, Lightning Network. I've gotten a lot of demand to actually make a report on Lightning Network. So I mean, yeah, I haven't gone. So with it's funny. I know more about the altcoins than I do about Bitcoin or the Lightning Network.
Uh-huh.
But at a high level, I'd say it's a state channel, and
Right.
I've heard that people have used off-chain settlements like PayPal and centralized payment processors. I don't know if that's still true or what state the project is at, but it's just the same case of there's more privacy and there's more things are faster, but I think it's still more of the same, right? You're sacrificing some decentralization for some speed there. Right. But I'm yet to take a deep dive on this one and report on it. So,
right. And so also the Lightning networks aren't just limited to Bitcoin, right? Ethereum is working on what they call the Raiden network, and there's other initiatives that bring similar services as the Lightning network to other blockchain platforms. So that idea has some merit. A lot of people think, and so you might see a similar technology on other platforms.
Oh yeah, so I mean, and yeah, I guess it's just a nomenclature thing because when I mentioned Lightning Network, I was talking about it more in like the proper noun sense of the Bitcoin Lightning Network. But yeah, we have Raiden, and then there are all kinds of proposals for Plasma and Plasma Cash and Sharding. So all these proposals coming up. So state channels, right?
Right. Can you elaborate on the difference, if there is one, between state channels and off-chain or side chains?
Oh yeah, sure. So I mean, the focus with state channels is more of a broad term for any. So it means states. It means that you're getting the state of a blockchain. You're bringing the transactions off chain, and I think people can make transactions with whatever means they want, basically, and they just have to put it. They have to put the states of the final set of transactions back on the blockchain. So, like, let's say there are 100 people's transactions on the blockchain, mm-hmm. and two of them want to make a series of transactions, maybe like 700, mm-hmm. and they don't want those 700 transactions to bog down the blockchain, right? Uh-huh. So the state is kept on the blockchain before those two go off, and they have a lot of privacy there. And then when they're done, then they go back on the chain and they continue where they started, or they continue from where they ended.
I see. So like Ethereum Classic there's the state of the entire world computer, but hypothetically, a subset, part of that state that a group of people own, that they could hand off. You could conceivably hand off control, and so it could evolve beyond Ethereum Classic and then eventually be written back.
Yeah, that's the thing, and the main difference is that the side chains is just a blockchain within the blockchain. Like that's our blockchain connected to a blockchain. That's how I think about it. Right, and then that's the main difference. So it sounds to me that sometimes I feel like sometimes state channels, can a state channel not be a broader term for even side chains? I've seen them used interchangeably. So
so for the listeners, it's important to keep in mind. So people might use state channels and side chains and mean the same thing, but the umbrella concept is the idea of doing work off of the main chain. That everybody can agree on, that they all involve that.
Yeah, absolutely. And with smart contracts, CryptoKitties, the common example you see amongst many white papers, you see like CryptoKitties was a game in Vancouver that crashed maybe not crash, but slow down the whole Ethereum blockchain. Because part of the reason, because maybe there was no mechanism to get that game off the main blockchain where everyone's trying to send money all around the world.
Right.
And so maybe a different blockchain for smart contracts, such as that game, and one for transactions, right? So that's just a prime example there.
No, actually, you know what? I'm glad you mentioned CryptoKitties, because that, speaking of the need for more scaling on Ethereum Classic and Ethereum and related systems, that of course just shows the fact that how much we need more scaling, right? Because it's something as simple as that game could cause so much trouble.
Oh yeah, token sales, all kinds of gas wars. So just increasing gas prices as you're trying to invest in an initial coin offering, time and time again. And the idea of transactions, of gas transactions, right, of paying fees. So these are all things that people are trying to solve in different ways. We have VeChain that actually has a different economy for gas, so that the gas doesn't increase as the demand to use the blockchain increases. So I mean,
interesting.
Yeah.
Okay. Yeah. And then we've touched a little bit upon sharding, but unlike these side chains, sharding attempts to break the existing main chain into pieces that can somehow coordinate. And so that's another thing that people are looking into. So yeah, sharding, side chains, side channels, all kinds of different ideas, right?
Yeah, and I think sharding was stolen from the software development world, because there I think a type of database system called NoSQL databases have something in place called sharding. So it's not really a new concept. So they're just trying to retrofit this concept for blockchain.
Right. The idea of having a database that is geographically distributed or distributed across multiple machines is an old idea. And there's been some work on that area, but how we port that idea to blockchains is a work in progress.
Definitely.
Yes, definitely. All right, very good. Have we forgot anything, or is there anything else you want to add to our scaling and blockchain trilemma discussion?
Let's see here. So, I mean, I'd say the Ethereum community is probably, I've seen there's so many business models built on Ethereum protocols, right? Uh-huh. And there's this kind of war. To me, I see there's this kind of like race to scalability, because the project that has, so if Ethereum, keeps on kind of moving along and gets to this point where they can support more transactions, mm-hmm. then that's it. They're the winner. But it's like, there are all kinds of projects that are in my opinion, miles ahead of some of the drawbacks that Ethereum has, but they have the problem of adoption. So they don't have the users, they don't have the, EOS has a lot of users, but I mean, besides that, the users kind of lagging behind. So I'd say it's kind of like there's this window of opportunity that certain projects have to get to that level. And I don't know how it's going to happen. So that'll be an interesting thing to watch in the next few years.
Right. And so I'm thankful that there's lots of ideas being tried simultaneously. So it's kind of like Darwinian evolution. So we'll just sit back and see which ideas take off and have merit, right? And hopefully the best ones will emerge victorious.
Exactly. Yeah, totally. Somebody referred to the Cambrian theory, how there's like a surge of all these new crazy products and ideas and ICOs and everything, and then one day the ice age comes, and then everything gets then only the real ones survive.
Right? Yes, we're beyond the Cambrian explosion now. We're in the temporary ice age. Hopefully it's just yeah. That's right. All right. Well, thank you, Natu, for sharing your insight, and I appreciate it. And I wish you well with all your entrepreneurial activities.
No worries, Christian. This was fun. Thank you for having me on the show.
All right. Bye-bye.
All right, bye.